Hello undisputed trader. Today I want to discuss market structure, which are the fundamentals of trading. You understand? It is the building block on which every trader should build on. By looking at a chart within a second or few minutes, you should determine the actual direction of the market. So if you have this kind of knowledge, you have an edge over multiple participants in the market. So fundamentally, we have two type of price action in the market. We have the trending price action, and we probably have the ranging price action. You understand? The trending price action have sub category in under it, you understand, which is the bullish and the bearish price action. In the bearish price action, under trending price action, you would want to see the price forming a series of lower low, lower high, lower low, lower high, lower low. And for that bullish market, you want to see the market forming higher highs, higher low, higher highs, higher low, higher highs, higher low. Whereas in the ranging market, the market has no definite direction. It is moving, bouncing up and down within a range. So that is typically the three fundamental type of market as price action that we have in the market. So let me go deeper and show you how this thing works now. So let's go to the chart. Let me show you how this thing works. So these are a typical example of a bullish trend, and what makes it a bullish trend is the formation of the higher highs, higher low, higher highs, higher lows, higher highs, higher low. You understand? And one of the main thing that makes it a bullish market is the subsequent break of structure after an impulsive movement. You understand? After a brief retracement, the next leg will always take this guy out, the last bearish movement. You understand? So let me show you. Sorry. So this is what I'm talking about. You want to see a clear break of structure in the market. So if you want to trade, you want to see a clear break of structure in the market. So, and this break of structure should take out the previous resistance zone or previous impulsive the highest point in the market. So it will automatically validate it as a break of structure and equally validate it as a bullish movement in the market. So a clear break of structure should happen with the candlestick closing above. I will get to that shortly. And so you want to see the market breaking structure to the upside at any given moment. After the brief pullback from this impulsive movement, the next leg should take out the previous high. So in that case, you are going to call it a bullish trend. You understand? So the market is actually in a bullish trend. So what you are essentially looking for in that particular time that you have discovered your direction of the market is to buy at any given moment when the price come to your order block or any fair value gap in the market. So you have to buy the market, you understand, because you have determined from the onset that the market is breaking structure. So it automatically makes it a bullish market. So it is with the bearish market as well. So this is the bearish market. As you can see, we have the market forming series of higher high, a lower low, lower highs, lower low, lower highs, continuously like that. And what validate it as the bearish market is the break of structure in the market. So the break of structure in this case is the break of the previous low, you understand, in the market. So when you see the market printing a successive low, you understand, you know that the market is under a bearish trend. So just like I told you earlier, for a bearish trend or for a valid break of structure to occur, you want to see the market close below the previous low, you understand. So once the market close below this previous low, you know that okay, the market is in a downtrend now. So the moment the market pulls back again into another block or a fair value gap, you have to look for a sell opportunity targeting the previous low as your liquidity, you understand. So that is how this market essentially work. And let me show you again, for a valid order block to happen, you want to see the market, closing with a body, not a wick, you understand. So for example, if this is an upward trend like this is first leg, higher highs, higher low, you understand. And this is our break of structure. What makes this guy a break of structure is the closure above the previous high, you understand. And this previous highs will occur with a body, not just a wick, you understand. And this is what makes it a valid break of structure, because it doesn't just close above this previous high with a wick, but rather a body. So the body pierced through the previous resistance or minor resistance. Likewise to this guy as well, likewise to the trending down or the bearish market, you want to see the market closing or piercing the previous low with a body, not just the wick. So for example, if you are seeing the market forming series of lower low, lower high like this, you understand, series of lower low, lower high to continue forming this direction, you want to see the market close with a body. You want to see the market close or breaks through this previous support or minor support with a body. Here it should close, pierce through it with a body, not just a wick. So that validates it as a strong uh, break of structure, validating that okay, this guy now is actually on a downtrend. So if you see another opportunity that the market return to this place again, you want to set the market and target this low or target another unmitigated demand zone below here, you understand. So that is how to trade the market. And if you have any question, I can help you. So if this is your first time reaching out to us or watching our tutorial, please make sure you do like our video and subscribe. So, and if you want, I can go to the chart and demonstrate it live for you. You can see on this is GBP USD chart, Great Britain part chart. You can see the market forming, printing higher highs to the upside. You can see it from here. The market prints higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, you understand, continuously. What makes this guy a bullish trend? If you can see from this place, the market has been trending downward, but all of a sudden, after this liquidity sweep here, this is what we call liquidity sweep. Why is it liquidity sweep? This guy here is liquidity sweep because he closed below it with a wick. So when the liquidity sweep happen, you are expecting the market to turn, so and eventually the market turns to the upside. That the change of character happens around this place, you understand. So this is how to trade the market. And this change of character that happens here, or break of structure that happens here, doesn't just happens with a wick, it happens with a body. So that makes it a clear indication that the trend is obviously changing. And you can see that after this massive change of character or break of structure to the upside, the market kept going upward significantly. And you can see all of them kept breaking structure. They kept breaking structure at any interval. You can see from here the market broke structure here again, not just with a wick but with a body. You can see it pierced through it with a body, and after that the market keep printing. Now the market is resting on a strong zone now, so we are waiting for any opportunity again to target this liquidity here to sell the market again. So guys, this is how to use logic and follow the market so that you can benefit from the trend at any given time. So thank you for joining me. I'll be glad to help you with any question that you have. Thank you.